Okay, Dan Niles is with us. He's founder and portfolio manager at Niles Investment Management. Dan, good to have you with us here. Thank you very much for your time. Prashant this side. We've been having an incredible week here in India. We've kind of sort of completely so far ignored, and for good reason, what's happening around the globe. And the one big noticeable thing which has happened this week, Dan, is, of course, the big fall in the US 10-year. We're tracking some 25, 30 basis points since last Friday. In terms of a downward kind of a move. And now we get the jobs data. Is the market in the US starting to get concerned about growth, both labor market growth and growth in general? And what does it mean for equities eventually?
Well, right now we're sort of in this Goldilocks scenario where the market thinks the economy is slowing down, and you've seen that in the 10-year moving lower. And so rate cuts are getting more priced in. But it's not slowing down so much that people are worried about a recession. And so that's a very fine line to have to walk. And so every data point that comes out, you're seeing the market really taking its cues from what's going on in terms of thoughts around, are there more Fed cuts coming? Are there no Fed cuts coming? Or are there raises? And so that's why every data point that comes out is really important right now.
Dan, hi, good morning. What's the sense from here on in terms of just, the policy? I guess no one's expecting a rate cut come next week, but a lot of participants are still working with one, if not two, rate cuts down the year. Where do you stand on that? And what do you think that might mean? I mean, further upside to equities if those rate cuts are indeed delivered?
Yeah, I mean, what actually concerns me is, are we going to get more rate cuts than we're expecting, but for the wrong reasons? And the reason I say that is if you look at what happened last week, you had some very big, prominent software companies that were all supposed to benefit from AI. And by those names, I'm talking about Salesforce, Workday, Snowflake, MongoDB. And these are companies that are saying, oh, AI is great for our businesses for a variety of different reasons. And every single one of them cut forecasts, and the stocks got absolutely clobbered. Now, these companies all have April quarter end, so they reported 1 month after a lot of the bigger players reported. And so the question has to become, is this sort of a harbinger of weaker earnings that these companies are going to start to report in June? And do we end up with more rate cuts than we're expecting, but for the wrong reasons, which is the economy, after this historic set of rate hikes we've seen, is actually starting to feel some impacts from that now starting to hit the economy. So I'm actually more focused on earnings right now than I am on, whether the Fed cuts twice or ends up not cutting at all, because the stocks are sort of priced for perfection, but there's some signs that there's some fundamental issues starting to crop up.
Hi, Dan. Morning, and good to see you. Dan, I want to ask you, what about the emerging markets, particularly like India? For most markets, you're looking at earnings and what the central bank will do. We had an election outcome as well out here. So what's your view in emerging market, particularly the India versus China debate, and India at these valuations?
Well, I mean, I think obviously anytime you have to trade markets around politics, it's kind of dangerous. But in general, on a longer term basis, I prefer India to China, for the simple reason of a lot of companies are trying to move manufacturing out of China into India. India's obviously got a very skilled workforce there. They're building up the infrastructure, and your population is expanding, where China's population shrunk for the first time in 60 years. So, versus the short term, what happens over the next week or, even towards the end of the year, if you look at it from a longer term basis, I think it's hard not to bet on India over China looking forward for those reasons.
All right, and India is the pick from all your emerging market coverage as well, other markets, LATAM, etc. India finds the top ranking out there?
Yeah, I mean, I think so. And because to replace China as a manufacturing center and a source of technology, you need a very large country with a very large population and that has policies that are very pro-growth. And for the US, that's sort of friendly to the United States as well. And so India is the only country you can think of that fits all of those buckets. And, Latin America obviously is important to the US in the sense that we have, they're right next door, but it's not big enough, in my opinion, nor with the tech expertise that's sitting in India or the investments that are going in there to compete as well as India should be able to compete over the longer term.
Dan, since you like India, I mean, any sense of the kind of funds that you either have already deployed here or looking to deploy? You know, what we've been seeing in this market is a massive wave of selling from foreign investors. Now, you can argue the last couple of days probably because of, the election outcome and the Modi government not getting as huge a majority as was expected. That's an argument. But even, before the elections, it's just been complete selling right from January. So why is that so, considering the narrative seems fairly positive from what you say?
Well, you have to remember there's one big thing we haven't talked about. That's artificial intelligence. And where are the companies that really focus on that? Well, they're sitting in the United States. And these are $3 trillion companies. You've got 3 of them up at that size, dropping on down. And so if you're looking to invest in that, the United States is where you're going for that. And so for myself, that's where we've got our investments concentrated. Obviously, I'm in the United States and most of our investments are here, but those are the names that I want to focus on because this is a huge, we haven't seen anything this big really since the start of smartphone launch back in 2007 when the iPhone first came onto the stage, or really since the internet. We heard about this thing in the late 1994. And so this is going to just change how the world functions. And that's why I think there's more money flowing here from there.
Well, final question before we let you go, since you mentioned about the $3 trillion club. What are you making of NVIDIA's rise? Market capitalization of NVIDIA as well as Apple, I think, is similar. But Apple's revenues are nearly 4.5 times NVIDIA's, and EBITDA is nearly around 2.5 times odd. But you believe it's gone up for good reason. A quick comment on both those two?
Sure. I mean, I think with Apple, the hope is that on Monday, you're going to have the Worldwide Developers Conference. Apple's going to introduce AI into their phones, and that should enable the stock to start working again. Because if you look at Apple, their March quarter revenues that they reported are down 4% relative to a year ago, and even relative to 3 years ago, they're up 1%. You look at an NVIDIA, and their revenues are up over 260% relative to a year ago. And the AI spend is only at 1.5 years in since we heard about ChatGPT at the end of 2022. And if you look at the internet build out, that lasted over 5 years. And so I think we have a lot more room for growth in NVIDIA. But don't get me wrong. I mean, NVIDIA, I think before the end of the year probably has a 25-30% correction in the stock price, just because you're going to have to digest some of that internet spending. But that's how you can think about both of those near term. Over the next several years, I would certainly think NVIDIA will do better just because we have so much more spend to go as we build out the artificial intelligence infrastructure.
We played out that bite from Aswath Damodaran yesterday, right? He said that if you had a design from scratch, a perfect momentum stock, you throw in this, a little bit of that, I mean, it would be NVIDIA. I mean, if you were to design something, because it's of course, you've got everything going for it so far, but it's interesting. Dan says that maybe a little bit of correction, maybe a little bit of pullback by the end of this year. Dan, great conversation. Thank you very much for joining us, and hope to have you back soon here on CNBC-TV18. We'll take